You want the lowest rate possible, and so you're thinking about refinancing because maybe you have a 7 or an 8 from earlier this year. Well, let's talk through about what exactly you should do and what you need to check before you refinance. So I'm Casey Jenkins with Oak Realty, and when you're looking at refinancing, a lot of companies, what they'll do is they'll take your closing costs and your points and wrap them into your mortgage and into your loan. So your loan actually goes up. Say you had a $200,000 loan and all of those cost about $12,000. Your new loan amount will be $212,000, which isn't a ton of extra money when you think about it over 30 years, but when you think about how fast you pay down those first couple years, it's really, really slow. And so if you're thinking about moving in the next couple years, it might not be the smartest thing to refinance and add that extra money into your loan, or it might be a smart thing to find a company that does refinancing for a lot less. The other thing to think about is you'll hear these really big, really great interest rates. We're like, we can get you a 5.5 or we can get you a 5.0 or whatever it is. What they're doing is they're actually having you buy down points, and it's probably in the teeny tiny fine print that tells you how much you're paying. I looked at it this morning because I was talking with one of my clients about those rate buy downs, and he was super excited that he was getting a 5.5, and the average rate right now is in the mid to high sixes. And I showed him like, hey, if we buy it down to a 5.5 in this particular company, you're paying an extra $8,000 just to get your rate down. How long is that going to take you to break even and actually pay back that $8,000 before you start making money? Because if it's going to take 3, 5, 10 years and you're moving in the next 2, then it doesn't make sense to go ahead and refinance. If it's only going to take 2 years and you're moving in the next 5 to 10, well, that might make sense. The other thing to think about is a rate's going to continue to drop, because if they continue to drop and you refinance now, and then maybe the rates drop enough that you want to refinance in 3 to 5 months, is it worth it to pay down those points right now, wait for the rates to drop, and then refinance again then? Now you're paying tons of money out where you're not saving a ton. So when you're looking to refinance, make sure you get your lender to give you what's called a cash to close. It's a sheet of paper that lists all of what you're going to pay, including points, including closing costs, including everything, and it shows you what the new loan amount will be, and then it also shows you what you're bringing to the table. There's companies out there that'll definitely refinance you just for a couple $100. They may add $1,000 to your loan, but you're going to get that back from your escrow account and can immediately pay that down. Or there's companies out there that will make you pay thousands of dollars to refinance, and then they're going to either add that onto your loan, or again, you have to bring that to the table. So weigh the pros and cons when looking at refinancing. Is it worth the money that's going to be added to the loan? And are you going to be there in the long term to actually make that up? Because if you're refinancing and you're only going down $50, that's going to take a while to make up all that money that you're going to pay in closing costs. If you're refinancing and you're able to get down to a 15-year and yes, you may be paying more, but you're going to pay it off faster, that might be a great thing to look at. Or if you're refinancing and you're going to save $200 or $300, that could be a great thing for you to look at. Just do your research. And if you've got questions and you're really confused and you're like, what the heck are you talking about? Reach out. We'd love to chat with you. We'd love to walk through the process just to make sure it's the right thing for you. I can tell you, rule of thumb for me, it has to be 1% or more difference in my rate versus the rate I'm getting without any points for me to even think about refinancing. And a lot of times what I'm looking to do is I'm trying to get from that 30-year to that 15-year. Yes, I'm going to pay more in my payment, but I know I'm going to pay it off a heck of a lot faster. And I've done the math for all of you that say pay a 30 like a 15. You can't do it. The interest that you pay on a 30, even if you pay it with the extra payments to make it look like a 15, you will still pay more interest on a 30-year. So those are some of my tips and tricks, some of my things to say, hey, take a look at this, because everybody's going to send you a ton of stuff. I can tell you, a month after I closed on my house, I was getting stuff to say, hey, refinance, and the rates had actually gone up. And they were still sending me stuff. So take a look, really dive into it. Make sure that this makes perfect sense for you and that you're going to be there to be able to make up that money. Because if not, you're just chucking money in a hole. And who wants to spend money that they don't have or that they're not going to get the most out of? So give us a call if you got any questions. Shoot us a text, and don't forget to like and subscribe.